the 20th, Algo Factory free to the public live lab. So we're over on YouTube. If you are watching us on YouTube, do us a favor, like, subscribe, follow, and click the notification bell, all those things that you do when you watch YouTube and you like something. Also, on the screen, you can see a QR code in just a moment here. And if you zap that, it'll take you over to our website. And you've got our website written right there, algofactory.tech. Come check us out. We'll talk more later about what we do. Long story short, we help people become traders. It's good stuff. It's Friday. Not a lot happening in the market this morning, right? So there's not no economic data. We had Powell speak yesterday. He gave mixed comments. It was kind of reported as dovish. A lot of people said what he said was dovish. The dollar moved in reflection of that. So basically, what his comments were, if I were just to kind of, as far as the dovish comments were, to sum it up, would be something along the lines of the interest rate hiking has been causing damage to the economy, which of course we know that's by design. That's not a secret. I mean, that's the whole idea. But he was, I think, was saying that the damage that has been done may be something that we want to look out for, be careful about. So in essence, a lot of people see that as, oh, well, maybe they're, going to hang back and stop hiking or not hike as much. And whatever that does, it causes the dollar to become weaker by, what's the term? Perception, right? So then, of course, in the charts, the dollar goes down and anything against the dollar goes up. And we did see that happen, at least initially. And that is that. Certainly happened with gold. Of course, gold was already going up, and we'll take a look at that chart. I think we'll aim that way first, and also we'll take a brief look at next week's economic data coming out, so we can kind of have our eye on next week. So lots going on Monday. A lot of data comes out Monday, so Monday is going to be real funky to trade, whether you're trading European or not Monday, but Tuesday, whether you're trading the European session or the U.S. New York talk session. Tuesday is going to be like that. Lot going on there, so you're just going to have to be nimble. I take that. Well, I don't want to take that back, but what I said is true. But there are opportunities that day. So we'll look at that now. Go ahead and pop up the screen here. Let's see. Entire screen, share. I'll the current screen is zoomed in, so you should be able to read it. And what I'm going to do also really quick, I'm going to take a moment to spread the link around. Let's see here. Want to invite everybody over at the Rogue Discord to come and join us. That'll just take a moment. I actually had it kind of prepped before the show, and then I left that page, which was okay. Good, done. All right. So looking Monday, as you can see on the screen, nothing. Just yellow folders all day. So the New York Open, everything might be predictable. There might be some tradable price action. I haven't seen a ton of volatility on non-news days, though. Like today is low news day, not a ton of volatility, but it's tradable. So it might be that we have to focus on some swing trades if the day trading just doesn't have the kick that is needed. My gold trade that we're going to review was definitely a swing trade, and it went great. About it was like 2.2 to 1 and paid off over like 2.5-3 days. So it was beautiful. And I did that trade live, and I think I did it live on this live lab. So not even just our members, but anybody watching on YouTube is able to see that trade happen from the beginning. So now Tuesday, where all those red envelopes are, you have British unemployment data at the European Open. See, not long after the European Open, you have a lot of manufacturing data coming out. And then another hour after that, the British manufacturing data, and then the American manufacturing data. So that's all a lot of manufacturing PMI data come out. And basically what that's going to do is they're looking at purchasing manager data. So when when you want to know what's happening in the manufacturing world, you look at the purchase manager data. And I think this is a month over month look, right? So I think it's, you get this once a month, if I'm not mistaken. And what they're looking at is if a manufacturer, or there's also services too. So it's both goods and services. Manufacturer makes goods, services give services. And so when a purchasing manager is buying more items or a certain kind of items, then you're going to know that that industry is hot, meaning like things are doing well. And if they're not buying certain items or not buying any items, if there's a general downtrend in item purchase, then of course that sector is not doing so well. And when you have, I mean, that's it. The economy is good and goods and services. There's nothing else in the economy. So it's a pretty good indicator as to how things are going. So that number will be pretty indicative. Now, of course, like any other metric, numbers can be fudged, but we don't care about that. We just care about how the number looks and how that affects trading, right? So we're pragmatic here. We set our morality aside. It's like, the numbers are fake. Okay, so they're fake. So what? We're here to make money, right? Like, and they're not all fake. There's just might be a little bit of fakery to it. The number might be dead nuts on. We don't really know whether it's fake or not. For the most part, there's certain numbers. We know how certain numbers are kind of chopped up. Like your CPI is going to only reflect certain things or leave other things out. Your unemployment data leaves out people who have been out of work for more than 6 months. I mean, we know some of those things, but the general trend may still be intact. We do live in the world of numbers being revised a month later. So, then, it's been fudged, and, after the fact that it's been fudged, and that world is becoming more and more commonplace. But regardless, the numbers are going to affect the market, how the numbers affects the market. Now, when this data comes out, as you all know, I tend not to trade right away. I let the market kind of digest the data, and then it will continue along whatever line it was continuing before. Usually, not always. If the news is big enough, it won't. But that's generally how that goes. And then I wait for the market to digest, and I trade along those lines. 8:30 p.m. EST will be the Australian CPI. It's going to be a big number. So if you're trading any Aussie currencies on Tuesday evening in the US time, then you are going to have to watch out for that. Wednesday, a lot of Canadian data in the daytime, a little bit of little info overnight for Europe, the couple hours into the European session, but Canadian, basically their version of the FOMC. So that's going to be a big day for anybody trading Canada, right? So you're going to have their monetary policy report, rate statement, overnight rate, and their press conference an hour after that. So Wednesday morning is going to be landmines for the Canadian dollar. And the Canadian dollar is it's pretty volatile, but it's also super scammy to try to trade. Lots of scam wicks, for those of you who know what that means. Thursday, we have the European version of that. So the main policy rate. So a lot of this, a lot of big financial data coming out next week. We have that's going to be right before the New York session, and 15 minutes after that is the US GDP quarter over quarter. It's a big number, plus unemployment claims, which is weekly. So the data is going to be tricky to trade. So, but it is before the session, plus the European press conference. So it might be a nice session to trade once all that data is out. Just add some volatility to the market. And then Friday, you've got PCE price index, which is an inflation measure. So that's going to be before the open. And then the consumer sentiment just after the open. So I'd say around about 10:30 a.m. EST. That's when the Friday session should be relatively tradable. Today, though, it's pretty quiet. We had some data, like I said, from the Brits overnight for the retail sales, and the rest is going to be not that eventful for today. So let's take a brief look over here. I had a little Aussie dollar trade on super choppity chop on this here. So the trade actually went almost to my target and then popped up against me here. Let's expand and zoom in. That's just what you get trading the chop. I mean, I guess, I could have taken some profit early on, but I might get robbed on this one. Not the best week for me trading, except for that. Well, there's been some, my large trades have done well. My actual, full size entries have done well, which means I'm profitable. But my little day trades are not really working out that well. And I think a lot of that is because we're just in a time where the dollar is kind of trying to decide what to do, and which means I'm trading the chop, and trading the chop is risky, and that is what that is. So you can see like this price action here in the last day, last 12 hours has been super choppity chop. So you're just gonna get chopped. But overall, it should be moving into target. I mean, that's that is the trend, right? And it was the metrics as well. I think what we're just getting is a choppy pullback, and those pullbacks in the chop are nasty. It never went too far into loss though, so it should continue on the downtrend according to the metrics. If price were to go into my stop, it would just be kind of a bit of a scam wick, and scam wicks happen in the chop. It's just part of the deal. But at this point, I'm in profit, so I'm not too concerned about it. It's just frustrating to have those nasty pullbacks, and you got to sit through them. That's just part of trading, part of the psychological aspect of trading. Let's see, we got some comments in the chat. Lisa Great Amount. How sleep deprived cowboy is he? Shall not ever fall off the saddle. No, I was I had a cool cat. My good friend was just like, hey man, take a day off tomorrow, and I'm just like, I don't know, people pay me to do this. So I'm here. I'm here now. I'll probably get some sleep in the afternoon. That's how that'll work. Actually got to get a haircut today. Got the whole new baby life, so not a lot of time for anything. I got I got what, 2 in diapers. 2 in diapers will make it to where you just might not get your hair cut this month. So allow me to consume some coffee and see if we can knock these yawns out of the equation here. All right, so let's start at the beginning here. Yeah, scam. Look at that. Same thing on the euro. Now I traded the AUD JPY, if I'm not mistaken, but it's just it looks like today is going to be consolidation for a lot of currencies, and then eventually it'll break out. So what I'm going to try to do is to determine which way it might break out. Let's see here. For the euro, high time frame bullish. Yeah, I mean this is just going to break out whichever way it breaks out. That's actually going to be real hard to predict. I want to say bullish, but that's not. Look, eventually it'll go bullish, right? I mean, that's what the metrics say, is that eventually this will break bullish. But you know what it could do before it does that is it could break bearish to gather liquidity and then break bullish, which is a very EUR/US thing to do. EUR/USD likes to do liquidity grabs. So the question is, whether or not this range will be broken to the upside or not. I mean, this is kind of the range. It's a dirty range, but basically, whether or not price. Now, if price breaks to the either way, there are some concerning bits of structure that might interrupt the flow, right, on the downside and on the upside. But if I had an upside break, I would probably wait for the proper metrics on the upside break, and then let's just say it broke out over here. I'll wait for the right metrics, wait for a bit of a pullback, take that trade, and then ride it at least to just below this this peak of structure. So maybe like right here. And then, again, I would wait for the right break and retest so that I could have a nice stop. Maybe give myself a 2 or 3 to 1. it could break to downside. And if it does that, then of course you're looking at pretty much the opposite scenario. Something like this where it breaks out. Look for a good retest, a little bit of structure built. I could probably get a 2-to-1 out of that, something like that. So that's what the plan is for the euro right now. Unless you're kind of doing like I just did with the AUD JPY trading within the range and just kind of selling the top here and getting out of the bottom. So that's just another option for you. But range trading is like a beautiful way to make money. You just really got to be on top of it. You got to not get out. You have to get out before the range is over. And in this case, when on the AUD JPY trade that I took, the range wasn't very well established. As a matter of fact, the little bounce that looks identical to this with the AUD JPY, that is establishing the range, right? So, and that range can tighten and loosen. And I mean, there's a lot that can go on, right? If it just keeps bouncing in here but getting tighter, then the breakout could happen sooner, and I have to adjust this plan if it gets tighter, right? This range ends up tightening up to something like this, which it very well could. It's good. It gives me more room for profit, but then I have all these bottoms here that I don't, like to go against. So I probably would keep that bottom just like it is. Range top, yeah, I probably keep it like here. Just you got to mind some of these structures that price has to get past. You got to worry about that. So range is a little bit. What's the word? A little subjective. There's preferred range. There's all that. Now, I'm getting a question from Rikuku is, would you use leverage on this range trade? Look, Rikuku, anytime you're trading Forex, you're using leverage. It's not really an option not to. I mean, unless you want to, take a bunch of physical money down to the money changer and like, hey, can you turn this into euros for like a few hours? Like, unless you're doing that, which that's actually something that my dad was doing in the 70s. Through our uncle's company. They actually they started, my family kind of started a proto Forex market in the 70s, which is funny that I should end up doing this because I didn't know that until after I was already in Forex. The Rikuku, there's no choice but to use leverage in this scenario, right? If you're trading Forex, it's leverage. And it's usually 30-to-1 or 50-to-1, and that's with your that's with your brokers that are like established, like your regulated type brokers. They're almost all 30 to 50-to-1, depending on which currencies you're trading. There are some brokers that like you can, find and send Bitcoin to, and, they're giving you like 500-to-1 or 1,000-to-1. Like that's, that's remarkable leverage. I mean, a lot of times when you have leverage that high, you're going to be paying some pretty substantial fees. But that allows people just to put like, $500 to trade it as if it were 5,000, so which is, I mean, as long as you're not getting jacked in the fees, that does allow you to mitigate risk on that. Rikuku says, I've just traded crypto, never FX, but we'll be looking to soon. Yeah, crypto derivatives, of course, any kind of derivative usually is going to have some form of leverage. So it's that is how that works. But yeah, with Forex, it's almost all leverage. Because think about it, with Forex, you're moving fractions of a penny. Like you're not going to make a lot of money putting $1,000 on moving fractions of a penny. It's just not, it doesn't work that way. So leverage is the name of the game in Forex. Fortunately, Forex is the largest market on earth. There are, I think, 5 trillion a day goes through Forex. It's the largest market on earth. So now there are advantages and disadvantages to that. Part of the advantages is all the liquidity. Part of the disadvantages is you are playing with the largest players who will jack your ass. But at the same time, I mean, yeah, sure, those market makers are harsh, but dude, it's not, I mean, crypto's got scammy market makers. Like, it's not like it's any worse really than a lot of other games. So, like penny stocks and stuff. Look, just you take your whatever you like, trade whatever you like about it. Meaning, like, I like Forex because there's always action, right? Like up or down, you can win. You don't have to wait for a spot to go long. But of course, if you're trading stocks, you can short those too. But at the same time, Forex just, there's a lot of predictability. When a lot of the economic data are coming, and also A lot of events don't affect Forex that much. The fundamentals of these currencies remains relatively the same. So, some news about some stock is going to send it to the moon or into the toilet, and you didn't know that news was coming. Like, it's not as common for Forex to have that issue. So that's just my opinion. Trade what you want to trade. Crypto, I love trading crypto when the market is volatile. And right now, crypto is just choppy. I mean, we've had, Uptober. So with crypto, we've seen Bitcoin make its way up. We actually take a quick look at that. We've gotten a decent look at the Euro plan, the EURUSD plan. But let's roll over real quick to look at Bitcoin so we can just talk about what's happened with the price action on Bitcoin. I'll do it on this chart. It's fine. Now, as people remember this move up that we've seen this week, it started with fake ETF news, BlackRock ETF. BlackRock's gonna have an ETF, and then the price shot up, and it really shot up hard, and it took out a bunch of liquidity. Now, 30 minutes before all that happened, I was here on this show, and I think it was Monday, if I'm not mistaken, and I was just telling everybody, hey, just so you understand, there's a lot of liquidity in the low 30s, and we mapped that out. We saw liquidity. Well, look where price went. It peaked up to low 30s, grabbed that liquidity, right? This spike up, grabbed the liquidity I was talking about. And then people wanted to get short and went ahead and punished the shorters. Bitcoin is known for punishing shorters, right? So just to get a quick look at what the liquidity is at this time, we'll do that. We'll take a look at that. We'll spin the spinning wheel, see if we can make some credit money here, some free credits on the Kingfisher. Couple credits. I like it. I'll take it. Let's look at it. Okay, so now at this time there's liquidity in the 32.4 and 31.6 area, right? So 32.4 and 31.6. So you're looking at right here. And there's liquidity around that. It's not strictly where that line is, but that's where liquidity is right now. So now, did the charts support a move up that direction? First of all, let's map out whatever liquidity is below, because it's a lot closer and it's a lot bigger. A lot more people are long right now. So you got 28.6 and 28.1 and everything in between. So 28.6, 28.1. So here's 28.6, 28.1, 50 really. And then everything in between these two. There's actually plenty of liquidity right there. And that makes sense because you have all this price action that happened prior to that. So the liquidity is going to be built up. People will be long. Their stop losses will be here. So the question is, well, there's more to it. There's actually, if you look at it, laddering down, there's a bunch of liquidity. All the way down, 25, 26, 23. So just understand that right now liquidity is favoring a move to the downside, but that doesn't mean that the charts are favoring a move to the downside. We right now are seeing on the 3-hour an SMI dip, and it could very well be that price dives down to grab this 28, whatever it is, 28.1 and 28.6, 28.150 really. That's very possible in this near term. It's just that move down to that 28.1, 28.6 liquidity. We could easily see that. But crypto still has a very strong bias to the upside, at the moment. So either, I think, let me see here. Let's take a look at, so there's not a ton of liquidity up until 31.6. So what might happen is see, I got a trackball and my thumb went dry. Yeah, you know what, Brian? That's kind of how it is. Yeah, 20-minute naps, 30-minute naps. Right now, it's just the time of life I'm in. I got a kid and I run 2 businesses. So, you get sleep when you can. Yeah, sure, I'm taking years off my life, but screw it, man. You live one life. You got to do it. Yeah, coffee and my fuel injection. Speaking of coffee, let me just take a drag here. And I take a month off of coffee twice a year. So during that time, the workflow might decrease a bit, but you got to give the adrenals a rest. I don't care what anybody says. So the market, what we might see at this time is I don't know if it's going to be fast or slow. Bitcoin's tricky. It likes to go either fast or slow. Like it'll move. It does one of two things, right? Moves up to an area, consolidates for a while, and then bam, breaks down to it like that, right? Or it just breaks down. It just goes like to grab its liquidity and move down. As of the moment, it is looking like it wants to peak down, but that doesn't mean it's going to happen. If I'm going to look at it strictly from a price action aspect, of course, you have this little bit of structure right here, and price may, and it already has touched it. So you might find that price kind of hangs out and consolidates in this area and gets tighter and then moves its way down. That would not surprise me one bit, but charts do favor move up still. And there is liquidity up high. And right now, I think just given the time of year and everything, I think we're expecting a move south. There's a lot of liquidity below this as we mapped out on Kingfisher, like all the way down. We'll look at it real quick, all the way down to the low 20s, all the way down to 19. There's a lot of liquidity sitting at 19.5, but all the way down, bunch of liquidity. I mean, this is like, dude, crushing this down. There's a lot of money to be made right there. And the crash tends to happen in November. October tends to be bullish. And then on the last of the 4-year cycle, prior to the halving, so pre-halving year, November tends to be brutal, tends to be a bottom of some kind. So I would not be surprised to see price dive down into the high teens, definitely, or not definitely, but extremely likely the low 20s, and quite possibly the high teens. And I think we just haven't seen it happen. And I think there might be some dives up for liquidity until then, and the charts are going to give us a clue, right? So that's just how it looks. That's what can happen. A lot of things can happen. What I just said might not happen. Liquidity can change. People can put on positions, and now that whole liquidity map that we just drew is totally invalidated. No longer looks like that. So that's how the charts are valuable. Charts in the algos are going to tell us kind of which direction things are favored. So that's the way to look at it. I hope this all helped. If you are out there in YouTube land, come to our website. We help people become traders. We help them build trading algorithms. It doesn't mean that you have to know how to code, or it's not necessarily a what do you call it? It's not necessarily a computer thing, right? You don't necessarily have to auto trade. A lot of people prefer to manually trade, but as long as you're doing the same thing every time, then that's what matters, right? Whatever you do in an algo, it's all about the same thing every time. That's just how it is. You gotta have the same reaction to the same conditions every single time, and you gotta test that out. And we help people do that. We got a lot of people who are well along the way into their algo being ready to trade, and some people are live testing as we speak, which means they're starting to put real money on their trades, and they've only been with us for like a few months. So it really depends on your diligence and your tenacity. That's what makes a trader, is tenacity. It doesn't mean like you have to be super intelligent. It doesn't mean you have to be some math genius. None of that. All it takes is hard work and the willingness to persist. That's really key for trading. Persistence is key. If I had to take one, if there was one like skill or whatever, one aspect of your personality that'll make you a successful trader, persistence is that one. That's my bit for the end of the show. So I'm going to hop over. We're going to close out YouTube. So, come visit us, all that stuff. We hope to see you in Algo Factory soon. We're going to roll over to the private session. So we'll be silent here for a moment.